You need to understand the difference between cash flow and accounting. There's a place in your business for your profit and loss statement, but it's not in running your company on a day-to-day basis. Your P&L will lie to you every day of the week. It'll tell you you're making money even if you're not. There are two major differences between cash flow and accounting, and you need to understand both of these very clearly. The first one is depreciation versus equipment replacement costs. Depreciation is an accounting thing. It deals with what you paid for a piece of equipment 2 or 3 or 4 years ago. Equipment replacements, on the other hand, is basically dealing with what it's going to cost to replace that same piece of equipment 2 or 3 or 4 years from now into the future, and we're going to build that into today's pricing. That's cash flow. The second major difference is how loan payments are handled. If you have a $500 monthly loan payment, and of that $500, $100 is going toward the interest and $400 goes toward principal, what shows up on your P&L? It's not the entire $500. It's only the $100 in interest. Right there, we're dramatically underreporting the expenses and what it costs you to run your company. If the $400 isn't an expense, why isn't it showing up on the P&L? Your P&L will lie to you. We have to know the difference between cash flow and accounting and run our business accordingly.